Hey guys, welcome. We're going to talk clean energy today. That's the name of the company, actually, Clean Energy Fuels Corp. Ticker symbol is CLNE. This is an interesting one because, I think it's very much a disruptive company. They're kind of at the forefront of alternative fuels and low carbon alternatives and all this kind of thing. So they're potentially stand to benefit a lot from, being in that business. Over the last couple of weeks or so, though, it's actually become a bit of a meme stock. So it's caught the attention of the Reddit crowd on Wall Street Bets. They're grabbing onto the price, they're fighting the short sellers. So it's got a little bit of that attention that's complicating the story on this particular stock. And that makes it a difficult one to invest in, right? So you have to look at the fundamentals of the business. What's the risk? What's the good news story? All of that kind of thing. But you also have to consider this meme stock play. What's that going to do to the price action? What's the best time to get in? How do you get out? How do you monitor that whole situation? So it's a complicated analysis. I want to try to take a look at both aspects of that. So I want to take a look at the bull case. I want to look at the bear case. I want to factor in this whole meme stock thing that's happening to the company right now and what it could mean and how you might be able to play that one and what my opinion is on dealing with that situation. So stick around to the end and I'll give you my thoughts on all of that, and let's get into it. Okay, so the company story in this one is relatively straightforward. They're into a product called renewable natural gas. So of course, you can dig natural gas out of the ground, or you can actually capture it from the natural composting or rotting process that applies to organic materials. So basically compost, or you can capture it at source at dairy farms and things like that. So animal waste products as well. And then you can use that as a renewable source of natural gas to produce either liquefied natural gas or compressed natural gas and sell that as a fuel source for many different applications. The ones that these guys are targeting more than anything else, though, is long distance transport trucks. There's a lot of fleet operators that are converting their fleet over to use liquefied or compressed natural gas fuel sources. And, it's a great story because renewable natural gas in particular is the lowest carbon alternative fuel source out there. It's probably the cleanest you can get right now. The reason it's so clean is that basically it's capturing carbon that would otherwise have gotten released naturally back into the environment. It's turning that into a fuel source and then it's releasing it, obviously when it's burned as a fuel, right? But because you're capturing just as much carbon as you're then actually burning and releasing, it's carbon neutral in that respect. And then the story gets better if you're replacing a non-renewable fuel source with this renewable source, right? And so then you're cutting down on the use of non-renewable fuel sources and you're overall coming out with a net reduction in carbon emissions. So really, really great story for the environment. These guys are moving aggressively towards 100% renewable natural gas. I think they're at about 40% right now. And they have a target of 100% renewable natural gas sourced by 2025. And so that's an important point here. This business is in a bit of a transformative phase, right? So they're not all the way to where they want to be. They're nowhere nearly done in terms of evolving the technology and the infrastructure and the stations and all that kind of thing. So we could see a lot of change to this business model, but that's basically where it is right now with this aggressive push to 100% renewable natural gas in 2025.
What's the upside potential?
Okay, so if we had to build a bull case here, point number one is Biden's clean energy push. Politically, there's now a lot of will behind clean energy sources. They're aggressively pushing customers like fleet operators to move to renewable alternatives. And on the other side, they're pushing at the infrastructure operators and energy producers with credits and incentives and all this kind of thing. So there's now a lot of regulatory momentum behind this, and clean energy fuels is in exactly the right position to benefit from that. And I said before, RNG, renewable natural gas, is the lowest carbon alternative fuel source across all of them, right? And so really it's going to get the most attention. It's the most palatable alternative, I think, for folks that are looking to maximize the credits that they can get and really max and go all the way, in terms of conversion over to a renewable alternative. So I think this is absolutely going to drive a lot of interest in renewable natural gas from these fleet operators, because you think about it from their decision standpoint, right? They're trying to decide what to move their fleet over to, whether they're going to electrify or whether they're going to use hydrogen or whether they're going to use gas. So, you know, gas being the lowest carbon alternative, it's absolutely going to get a lot of attention from the folks that are buying or potentially going to buy RNG from Clean Energy Fuels Corp. So I think that's a great story. Things are really, really lining up well for the company in terms of what the administration is doing politically. Second point here is that, you know, the conversion is an easy alternative, right? If you're a fleet operator and you're looking at potentially electrifying, say you're going to go with a company like Hyliion and electrify your chassis by an electric drivetrain, I love the fact that this is an easy alternative for the customers or the potential customers of Clean Energy Fuels. I think that's a great story. The third thing here is the station infrastructure these guys have. I didn't realize this, but they're all over North America, you know, Canada as well as the US. And so, you know, they have more stations than any other competitor. So they're out there, they have a lot of visibility, and they're driving that ease of change for their customers because they're saying, hey, we've got the infrastructure, right? We've got the stations to actually deliver this all over the country so that you can actually refuel. You know, I don't know if the stations themselves are all that profitable. I think it's more an ease or a convenience that they need to deliver to their customers so that they can actually sell the renewable natural gas that they're sourcing, you know. So the stations are not necessarily the big money maker here. Even into the future, I don't know if they're going to be. I think it's more about capturing and selling and broadening that market for renewable natural gas than anything else. But still, I love the fact that they're the leader by quite a wide margin in terms of the number of stations they have out there, and any potential customer is going to be looking at that right off the bat. Okay, so the financials are pretty good here, right? You take a look at the balance sheet and the cash on hand has been increasing over the last several years. The balance sheet is really, really strong. I think that's a strategic action on the part of the company here. I think they've been building up that cash for something. I don't know what it is. It's two things to my mind. It's either a capital expenditure to fuel expansion with additional facilities or additional stations, one or the other, or it's a potential acquisition. I think as the political landscape moves the market around a little bit, I think that they think there's going to be an opportunity to maybe consolidate some of the smaller players, make some good acquisitions. That could be really cool because it could be immediately accretive to the bottom line, and we could see some better numbers come out of that. So I'm happy either way, right? If they can actually acquire a key company in this space and consolidate a little bit, or if they can use some of that free cash flow to expand and maybe pivot into a particular increase in efficiency or technology, that's a fantastic story as well. So I love where they are at cash-wise. The last thing here is something that hit the news a little while ago. It's this major deal with Amazon. So this really sparked a ton of attention and a lot of interest in the stock. It's a complicated deal. We don't know all the details of it yet. The whole thing hasn't been released. You know, some investors are concerned because through warrants, Amazon is actually taking an equity stake in Clean Energy Fuels. It amounts to about 20%, you know, depending on how the deal shakes out and that kind of thing. And a massive purchase, actually, a massive ongoing purchase of renewable natural gas that obviously is going to fuel Amazon trucks, you know. So we don't know the details of that deal, like I said. And we also don't know what that deal is potentially going to evolve into down the road. Who knows what that's going to look like in the future? I think if you're optimistic and if you're bullish on the company, you can dream up all kinds of scenarios where Amazon pours tons and tons of additional money into these guys. You know, you could say, hey, this is not a great deal because it's diluting the company, right? It's giving away equity just to make a sale of gas. I think that's short-sighted. I think there's way more here potentially than we know. And so I'm personally very optimistic that they're using this to strike up a very strategic deal with Amazon. And hopefully this is only going to grow in the future. So I think it's all good news for these guys.
Let's talk about risk.
Okay, so the bad news here. Point number one I'll put forward is the valuation. You know, even before the stock caught the attention of Wall Street bets, when it was down around the $8 mark or something like that, if you look at enterprise value, if you look at price to sales, you know, it was at least fairly valued, right? It wasn't exactly a screaming bargain. You know, and then the price action over the last little while has really twisted the valuation, I think. If you look at the competitive companies that are in this space, they're they're all over the map, right? Especially GEVO, their valuation is insane. But if you discount them and just look at the more rational crowd of competitors in this market, these guys are in the high end of the valuation of different players in this space, right? So certainly no bargain. And now that price has jumped due to the attention that it's gotten as a meme stock, the valuation has only gotten worse, right? So from a pure valuation standpoint, any entry here is not well supported by the fundamentals, and that's always a strong point in the bear case when it comes up like it has here. The second point I'll make here is price volatility is going to be driven by price volatility in the entire energy market, right? So the way alternative fuels work is the price of any given alternative fuel is heavily dependent on the price of the dominant fuel in that market, right? Which in this case is still fossil fuel technologies. So as the price of oil and gas and diesel fluctuate, it increases or decreases interest and therefore the price in all of these renewable alternatives, right? So you've got all of these variables moving around the potential price of renewable natural gas that these guys are actually able to sell into the market. Now, so it could be a great news story, right? It could be fantastic if all of those variables come together and drive the price of renewable natural gas up high. That's fantastic for these guys. The exact opposite thing could happen, right? You know, if fuel sources, if fossil fuel sources become cheaper over time, if the price of oil goes down, you know, the incentive to move here is not as great. It has to be political then. It can't be economic. And really, I need it to be both, right? I want to see there's strong economic pressures to move away from oil. I want to see strong political pressure to move away from oil. If both of those come together, it's a great story for any alternative fuel source. So, you know, with those variables, it's difficult to predict what's going to happen to the price of renewable natural gas. And we've seen that in different natural gas markets. These wild fluctuations as energy goes all over the board makes it really difficult for the companies that are involved to project future cash flows, right? To estimate profitability and for analysts to know where the stock is going, right? It's a really tough market to predict. And I think it's a point in favor of the bear case here because it's so difficult to model a fair value for this company. The third point I can make here in the bear case, and this is when you see a lot if you read into this company, which is the margins that they've been able to produce on renewable natural gas have not been great. They've been very low. Margins in this business are measured based on something called gasoline gallon equivalents, or GGEs. And so their price, their margin last year on GGEs was around 22 cents per gasoline gallon equivalent, which is very little. You know, I saw somebody make the point that you could actually make more money by going out and buying natural gas at distribution centers, trucking it across the country, selling it at clean energy fuel stations. You could probably make more money doing that than what these guys are doing by capturing it at dairy farms and organic composting facilities and things like that, and then moving it. So I think that's a fair point. I think they're not making a ton of money on RNG right now, but really the argument, the counter argument to that is their positioning for the future, right? So they're still in the build out phase. They're still developing the efficiency and the technologies and that kind of thing that allows them to capture renewable natural gas at source. And as that becomes more of a thing, right, as more dairy farmers get interested in selling the natural gas that they're able to capture, as that infrastructure builds out, right, I think that story is going to go away. And so this is a point where I think we have to look for a better story on the margins that these guys are able to extract from RNG. We need to see that number get a lot better, and that will remove a lot of the downside risk that the companies are seeing. And really, I think this is what's driving the short seller interest in this stock. They're looking at the fact that these guys are having a really tough time making money, right? So they're having a tough time making money with service stations, or the fueling stations, I should say. They're having a tough time making money on renewable natural gas as a commodity product. So the shorts are saying, hey, there's no money here, right? There's no profitability. These guys aren't able to make money. And while that may be true now, I don't think it's fair to count them out into the future. But at least right now, I think the short sellers have a point in the immediate term. The fourth thing I'll say here is there's a big risk because there's a race shaping up in clean energy, right? So we have three key players in that race. We have electrification, which is battery or EV technology. Is that going to be the dominant alternative fuel source for vehicles go forward? Or is it going to be hydrogen, right? Hydrogen fuel cells, is that going to, you know, take over and become the dominant player? Or is it going to be renewable sourced compressed natural gas, right? So those three alternatives as we're shaping up, I think if you just take a snapshot of that race right now, battery tech is in the lead, you know, especially in these smaller vehicles. In the fleet operators, though, in the transport trucks, the Class 8s that Clean Energy is targeting as a customer base, I don't think it's as clear. I think batteries are still really difficult applications in those phases, and natural gas is still got a shot, right? But the downside risk is that, you know, battery technology is moving so quickly, right? It could easily displace, or lots of other things could happen to make renewable natural gas a poor alternative for these guys, and suddenly the whole business model evaporates, right? Now, CLNE has tried to counter that argument here, and they're saying, look, hey, we could pivot, right? We could take our renewable natural gas and we could convert it to hydrogen, or we could use it to produce electricity and then charge batteries, right? So it doesn't matter, we're technology agnostic, right? I don't buy that for a minute. I think, number one, the cost and the complexity and the R&D and the CapEx that will be required to pivot and produce hydrogen as an intermediate stage, I think it could potentially destroy their business model, right? Or make it so difficult to succeed that it's not even worth trying in the beginning. So I don't buy that particular avenue at all. I'm less clear on whether they can actually produce electricity at scale and at cost and use it to charge EVs. That seems a little bit more rational to me. I think that's easier. That technology is further ahead. It makes a lot more sense. You know, there's players out there that have these solutions called V2G or vehicle to grid technologies that are doing exactly that. I think there's a lot of action in that space. So yeah, maybe that could happen. Still, it's an enormous pivot for these guys. Can they really pull off something like that? I don't like that amount of risk at all. I would rather see a clear winner of RNG in this particular race. Okay, so the last point I'll make here in the bear case is the fact that price action has seen a lot of speculation, right? Like, this thing has become a little bit of a meme stock. The Wall Street Bets guys have gotten a hold of this. They're interested in it because it has a bit of a short interest, and they're looking to force a squeeze, right? So they're trying to go in and inflate the price just enough that the shorts are then forced to cover. That increases the price more and more, right? And so you can actually trigger this dramatic escalation in price by doing this. They've had a lot of success at doing it with other stocks. I think that they could potentially do it here as well. And if you look at the recent price action, I'd say as I record this video, there's probably about a 22% premium on the price today that these guys have been able to drive. Basically, a week or two ago, nothing happened to this company, right? There was zero news, no catalyst whatsoever, and yet we saw that price action that, to my mind, was entirely driven by what these guys were able to do. So now, if you're looking at coming in and buying the stock, you have to realize that 20 to 22% of what you're paying is pure speculation that is completely unsupported by the business model, right? So inevitably that's a point in favor of the bear case, because you're buying something that has that speculative froth, as they say, on top of it, and that's risky, right? You don't have that downside fundamental support for the business that's really supporting the share price. So you have to be keenly aware of this if you're going to buy the stock today, that you know, you're basically piling in along with all of those other speculators. Okay, so let's tie this one together. So the bull case, to my mind, is based on the inherent characteristics of renewable natural gas, right? The lowest possible carbon alternative. Fleet operators, it's the easiest transition for these guys, right? The infrastructure is there. All of the pieces are in place to make renewable natural gas succeed in that particular market. I'm really optimistic that it will succeed, and I'm really optimistic that CLNE is in the right position at the right time to actually make it happen. I think the bull case is really strong based on all of those things coming together right now. The bear case, to my mind, is based almost entirely on the current valuation and the speculation that's happened, right? So on the one hand, the valuation is now twisted, it's inflated based on what's happened in the meme stock trade, and the speculation is probably only going to continue. I think depending on how successful these guys are at potentially forcing at least the early signs of a short squeeze, it probably means they're going to continue. If they're unsuccessful, they might lose interest and the stock price goes down, right? So yeah, I think if you buy this one, you have to be willing to play that game, at least to an extent. So if you're a purely fundamental investor and you're only interested in getting a fair price for a good company and that kind of thing, I think you have to stay away from this one until the meme stock interest fades. On the other hand, if you're not afraid of a little bit of speculation and you actually want to ride that wave along with these guys that are investing, you know, the Wall Street Bets guys, then have at it, right? I think it's not a terrible proposition, because on the one hand, you have this underlying fundamentally sound company that I think is probably going to do well. well, you know. And then on the other hand, you have these powerful buyers on the retail side that are potentially driving that increase in the share price. They may well be successful in forcing a short squeeze, and if you buy in here at this level, you could well profit alongside them as well, right? So it's not a terrible deal for somebody that is interested in a speculative trade like that. If that's you, then I say have at it. And there you go, guys, that's my story. So if this helped you understand this stock, please throw the video a like. I really appreciate it. Helps the channel grow. And don't forget to subscribe and ring the bell, and I'll see you all in the next one.